Grow an actively managed portfolio of gold, silver, platinum, palladium, and rhodium with Auctus metals today.
300, 400, 500. I think even I have some targets here. I have an $800 silver somewhere. I wrote 10,000, but I think it's going to be more like $20,000 gold. Peak stuff, guys.
Welcome to another Auctus Edge, where we look to give investors the edge they are looking for. I'm your host, Patrick Vieira. Patrick Karim, founder of North Star Bad Charts, is here to help us tidy up on the technicals and what they are saying. Patrick, welcome to the Auctus Edge. How are you doing?
Hello, Patrick. It's always great there to talk to you, and I can't wait there.
Yeah, good to see you again. It's been a while. I know there's quite a few changes in your life, and I'm guessing it's all been for the better. So good for you, and congratulations there. First things first, Patrick, the volatility with the metals we are seeing. How would you describe it, and how would you explain it?
Yes. Well, you got to say that what built up. I'm going to share charts, of course, because people they want to see what I'm talking about there. But essentially, we've had a great buildup in silver for many years after that bear market from 2012. And we did that nice base. And then we broke out in July of 2020. We exploded upwards, silver squeeze, remember January 2021, maybe. Then we had another base, another consolidation or continuation pattern from 2020 peaks all the way to 2024 early. And then we broke out. And then we got that explosion. That's, you know what they say, the bigger the base, the higher in space. Well, that's what happened to silver and just went up and up. I'll just share my charts there so people could visualize this. Here's a silver price on the daily chart. So after this base, I'm just going to zoom out here. Here's the big base I was talking to you guys about. Huge base, right? False breakdown to the downside and then reverse back into the pattern and then explode upwards. So we went crazy. And I had these lines here. So we were going at this trajectory, and the angle of a line, the slope of it is telling you the speed at which the price is increasing, because an inclining line means the price is increasing, right? As long as you stay above it. Now, when you get a steeper line, that means, oh my goodness, it's accelerating even more. And this is log scale, so this is very, very steep. Then we broke that. So we had a small slowdown here, and then it stayed above this acceleration line, and then it broke to the upside. And then we got another very steep line. I'm going to zoom in here. Very, very steep line, which got us to triple digits, got us to over 120, I think 121. But then this is where the damage happened. We had that huge down day. It was down like 26% on the close. We lost that rising support line. So that steepness, that speed, it just broke. We lost it. And now the price has to heal from that. I know a lot of people, they're expecting V-shaped recoveries. Look, that's a lot of damage done. So right now the momentum is going slower. So instead of going at the speed of that rising, very steep line, we've slowed down a little bit to this lower acceleration line. You're still in an uptrend, right? Higher lows, but now you have damage. I could show you, like, I don't want to scare people. I'll show you how this looks like back in the 1980s.
Yeah, I think one of the spooky thing with the 80s was that that $49, $50 high, it was very short-lived.
It was very short-lived. Yes. And it happened also, okay, I'll show you this chart instead there. When we had the 1980s peak for silver, so we had the similar pattern. It went up. It went down 26% in one day, then it went sideways, and then it crashed some more. It's happening now on the shorter time frame, but for a long-term bull market to end, because it's failing on the daily, you need more evidence of that. You need, where was I? So here's gold versus SPX. Look at 1980s. From 1970s, it ran strong versus the SPX. It had a 10-year bull run versus the SPX. So when silver had its daily blow off top, on daily chart blow off top back in the 80s, it had already run hot versus the SPX for many, many, many years. But look now, silver, of course, this is the gold chart, but they're both, they track together. Gold has not been running hot for 10 years versus SPX, right? Here you see when you have a blow off top in 2011, 12, You've been running hot for 10 years. We've barely, versus SPX, we've barely been running hot at all. We've been doing higher lows. We broke out a few quarters ago. That's a quarterly chart. And we're just discovering this crazy 45-year trend line that's morphing into existence, because you need 3 reactions. You have one here, you have a second one there, and now we're just discovering this line. So look, if gold was running hot for 10 years versus SPX, and we had this blow off top on the daily chart, on the silver chart, I'd say, okay, Pat, maybe this could cascade into the top. But I think what's happening right now is we're hitting this critical resistance. Gold's pulling back versus SPX, slowing down. Silver took that huge drop. It's going to need some time to heal on the daily chart, but I'll show you the silver chart that's the daily. I'll show you on the weekly. On the weekly, it's still nut trend, but there's a lot of it, but it's been very, very, very stretched on the weekly chart. Look at that. At the bottom pane is how far the price is from the red line, from the 36-month moving average. Look how stretched we are. It's like we're as stretched from the moving average statistically than we were at the 2011 top, that we were at the 1974 pause, and at the 1980 peak. Well, not as much there, but it went up higher 1980s. But this is not optimal, and there's huge amounts of volume here that you can see sometimes at bottoms, or you could see at tops. And right now, because the price is falling apart on the daily chart, this means there's just there should be a slowdown, and you should hope for a slowdown, unless you don't want this to keep rocketing upwards and with no healthy corrections, right? Because look, in the 1980s, it ran very hot. In the mid-70s, it took a couple of years for that thing to resolve. Look at that. That's 1974, then it broke out. It took 3 years. Even here, we had a silver squeeze. Silver, how much time did it need to heal? A couple of years. You don't want, after these run-ups, you want it to correct. You want it to correct. You want it to slow down and to create that next lower risk opportunity. So right now, if we're lucky, for anybody who's on the sidelines, this is a healthy and orderly correction where the price does not implode. It just goes sideways, lets those moving averages catch up, and we'll get another shot. Eventually, there's going to be this line here that's going to morph into existence, and then we're going to be able to buy that breakout at $80, wherever it is. It could even be a descending breakout line, and then we'll be able to buy even lower, and then after that, ride that second wave. Because you got to remember, again, why I think that this is not the end, the total end. It's just we need a healthy reset, right? We need the distance from the moving averages to catch up. It's because of this. It's because of this chart here. It's because we haven't run hot versus SPX for a decade. So it's still early. Copper hasn't even broken out versus SPX. A whole bunch of soft commodities are still like rock bottom. They haven't taken out. So there's no commodity bull era yet, because everything's still versus SPX. Nothing's really taken off. So there's still a lot of room to rebalance, to have those capital flows, leave the SPX and go more into gold. We still haven't seen that yet.
Would it be fair to say that, even though the price is somewhat, let's just say, kind of stalling a bit from what we saw last year anyway, and early this year, but momentum, there's still enough momentum that's been built up where it'll carry and kick in once again?
Well, the momentum stretch right now. So if I define momentum as the distance from the moving average, from that 36-month moving average, so what silver has right now, it's reached practically all types of classical measured moves. It's I'll show you this one here. Let's say that was a breakout. Here's a measured move added to the top. We've overshot it. If I put on the yearly chart, remove all drawings, and I'll get to so here's let's say the yearly chart for silver. It has a huge, that's like the greedy target. It's this. We haven't reached it yet. So from classical TA, we're heading 200. But if we go from here, we've reached all these moves there, these classical TA measure moves. So what silver has right now, it's momentum in the sense that it's a nut trend, right? It hasn't broken down the uptrend. It's still above, inclining 36-year moving average, above inclining 36-quarter moving average. It's still above all these moving averages, right? It's in an uptrend. So for a trend analysis, it's fine. But when you're stretched mathematically, when you're that stretched from the moving average, the lower risk entry points, they're down here somewhere, right? If somebody's looking at this and they say, I want to jump on the silver train, well, you've missed it. You've missed the entry point, right? There's an uptrend, but because you're stretched, you're vulnerable to a 26% down day, right? You're vulnerable to an important correction. You're so much vulnerable. You'll never find I don't say never, but you're practically never find a 26% down day when you're so coiled and close to the moving average, right? There's no euphoria. There's no huge profit taking. You're not perched, like you said there. When the price goes super high, and then when people start selling, there's no strong base. There's no base where you have a whole bunch of sellers. It's mostly like, speculation. It's a rocket ship upward. So it goes up. But if you don't create a base, then on the way down there, it's like the roller coaster goes down, right? So when you have a huge base there, here, you had a huge base. When it went down, guess what? It didn't go down more than the height of that base, right? Look at that base here. It created huge support for silver back in that drawdown back in 2022, right? Because it had a huge base here and that it bounced off. But if you're being objective, where's my base now? Where is it? It's scary how high we're perched. So it doesn't mean you come all the way back down. You see here it did it. The GFC, it didn't quite do it. Maybe on this candle chart, you see it almost came back down to that previous base. You gotta you gotta tell people the truth there. Like if we're lucky, we just get an orderly, like one of these arrows here. I don't know how it's gonna look like. It's gonna be like that, sideways. But hopefully you create a new base up there somewhere. You're going to let those moving averages catch up. They're going to give you some type of support. There's going to be something. But right now, there's absolutely nothing there holding this up there except an uptrend. Yeah.
Last year, we saw phenomenal gains in precious metals, and in particular with silver and platinum gaining roughly twice as much percentage-wise comparatively to gold. And this may be the year you want to rebalance your metals portfolio and get in on these gains. To do so, contact us at www.auctusmetals.com and we'll tell you how. I think it was last year, you and Kevin Wadsworth, I believe you both were suggesting last year that you might want to consider taking profits off the table. What was leading you to say this pretty early on, and some good advice back then?
There's two questions people need to answer before interpreting any type of advice or any charts. What's your time frame? Are you a day trader, a scalper, a position trader, an investor? Are you a stacker? Stacker you shouldn't even care about the price, right? Every day they'll take a little bit of their paycheck. They're going to go and they're going to buy, they're going to buy, they're going to buy. They shouldn't even care about the chart. If ever a stacker tells you he's looking at charts and he cares about price, he's not a stacker. He's a stacker / investor. Maybe he's looking at the long-term charts because he wants to, if we're at the end of a crazy bull run, he'll want to cash out some of his stack, but that's not stacking anymore if you start selling. So whatever, that has to be put in context of what time frame, because multiple places along the road, if I go on the shorter time frames, you'll have a whole bunch of pull flags. So let's say I'm a day trader or swing trader. Here I have a move. I have here, let's say, takeoff pattern, pull, flag. Here's the move, pull. And now I know that if we break out here, a classical TA measured move, the target is going to be around here. Then after that, it went sideways, then we continue upwards. So here it could have been a great profit taking place, depending if that was your play, right? If you played that breakout here from that pull flag, right here, you're in a profit taking zone. Now, if you're doing it from a trend analysis way, then your entries and exits aren't the same. Your entries could be from a trend perspective. Let's say I'm on the monthly chart for silver. Here, I'm above this breakout line, but I'm also above the 12-month moving average and above the 36-month moving average. And when I get those signals, for me, that's a signal to go long. I'm following moving averages, a trend. And no matter what the classical TA measure move, so let's say we did reach a classical TA measure move and we surpassed it, I'm not selling because my premise was I'm a trend trader. Until I close below that 12-month moving average, that blue line, I'm in there at the risk of opportunity cost, at the risk of leaving money on the table. But I will keep riding this until I close below that 12-month moving average. So that's why people, and that's another thing also. If somebody tells you that they're taking profits or they're scaling out, it doesn't mean they're bearish, right? Because taking profits into strength will never be bearish. Classical TA, actually, Patrick, will always sell at the peak. There will be no weakness because classical TA profit taking is measure moves. So let's say my breakouts here, my measure moves here. I have a profit limit here, stop with my broker to sell at $52 no matter what. So I will always feel wrong for a trend follower says, Patrick, how can you take profits at 53? But from a risk to reward perspective, where's my long position? Let's say I entered here, let's say from a T here, I entered here. My sell stop was right below that swing low. I entered here on this breakout candle. My target was here. I made a 6-to-1 risk to reward ratio. I risked 1. I entered here on this candle break. I had my sell stop close here, and I made 6 times my risk on that trade. A trader who uses classical TA doesn't care about trends or silver squeeze or comics. They're just playing the chart, making that money. If the trend keeps going up, fine. But sometimes classical TA guys, they reach their targets with pinpoint accuracy, and they, like that. Here's another example. And the trend actually stops there. Like here, you see, look at that, picture perfect. But sometimes also classical TA guys, let's say pull flag, they won't make it in time and everything falls apart. Or sometimes they overshoot. Let's say here I have my base and here I have a breakout. And then after that, I overshoot here. But over time, the classical TA guy doesn't really care because often, if you wait enough time, what's going to happen is the price might actually reach where the classical TA guy exited. It happens very close or close to. So the trend follower, he's still in the trend, but he spent all that time while something else was going higher. Maybe he should have bought gold. Maybe he should have bought oil. Maybe he should have bought copper. There's a whole bunch of stuff that you could be buying when an asset is going sideways. And then the guy who exited here at 50, 60, 70 might not look that bad in a couple of years if that thing decides to hibernate, right? You can't judge that guy based because on his exit. So it's all that nuance there. I tried to explain it thank you for asking the question, because somebody takes profit, a TA guy, classical TA guy takes profit, how is that bearish? People think you got to hold on until the trend falls apart. Like, it doesn't even mean he's not bullish anymore. It just means his profit, where, his parameters, the reach, right? It's like I don't know, poker player where whatever the pot odds, they fit for him. He does his thing. He grabbed what he wanted to grab, and he's out of there, even if he could have kept riding, pressing his luck. So that's kind of important there to nuance. Classical TA, trend analysis, time frame analysis, right? Like I showed you on that yearly chart, silver is still, from a classical TA perspective, on the yearly chart, still hasn't fulfilled its classical TA measure move, the big one, right? The big one's all the way up here to 260. The small one has already been reached, right? The cup here, we still have a higher target at 250, 260, like maybe higher. The smaller time frames, look at that. We're halting right now. We've reached that target here. So breakout, it moved so fast, silver, that it reached its handle target in the same year that it confirmed its breakout. That's a 2025 candle. But then after that, that just opens the door. I don't know. It's going to consolidate a couple of years here, a year, half a year, 6 months. Like, you're going to have to wait until that plays out, right? You've seen here sometimes, you look at that pull, it goes sideways a couple of years, a year or two, then it explodes, overreaches. Here, the 2000s, we had a breakout out of that base. pull, flag, and then after that, it went sideways for a couple of years, and then it reached its target. So we're just, there's so much euphoria, Pat. If anybody says anything that's not uber bullish for silver, it's construed as bearish. That's how strong the FOMO was before we got that 26% daily crash. That kind of people, they said, "Oh, Patrick, maybe you were right," and stuff like that. But that's not the point. It's not. It's just when it was just crazy. When we were at $121, Pat, you must have felt it. Like silver could do no wrong. It was, we broke the banks, COMEX, whatever, rupture. We heard all the stuff that we always hear when we're close to some type of peak. And yeah, it's just history repeats over and over again. But I just look at the charts. I just respect the charts. I know I'm stretched from the moving averages. I know statistically that you never enter. It's never a good entry when you're stretched that way. And it's just a good reminder, guys, next time you do see a crazy breakout and you do see me on Twitter, like going crazy, or our members on our website, and we look at that, even on the quarterly chart, look at this crazy breakout we had. Look at that here, right? That candle here. That was crazy. Next time that happens, guys, maybe you should pay more attention, because you should be the most bullish. You should be there on that breakout. That's when you should be the most bullish. You don't get bullish. The higher the price goes, the less bullish you should get, because that means you've consumed some of that horsepower, that fuel. You're using it up, right? And all these people that bought here, what do you think they're going to do when they're up 2x, 4x, 10x? They're going to take profits. People say, sky's the limit. Sure, it looks like that. But eventually, all the people that bought here, once they've reached their profit parameters, they're going to start taking profits. When they're statistically above the mean to a certain point, they're going to create that resistance eventually. But that's fine, guys, because it's just going to create the next takeoff pattern that we could play, right? It's just, that's what it is. But anyways, lessons over and over. People got upset, even at 120 silver or gold, silver, people, it could do no wrong. Well, guys, guess what? It doesn't work that way there. There's breathers, there's parabolic moves up, they falter. Low risk entries are found down here off huge bases. And if you don't see a huge base, guys, it's not low risk entry. It's huge bases, guys. Look at these huge bases with the crazy moves.
That takes me to your website, northstarbadcharts.com. In your bio, Patrick, it reads psychology background to effectively manage emotional capital. In your view,
Yes.
are we seeing a lot of emotional capital considering the volatility right now?
That's right, exactly. And I'll tell you one thing, like you guys, I don't know who's played poker or any sport, I think, professional sports, and when the guy goes on tilt, right? Everything's going his way, but after that, he gets a bad hand. Okay, then it drains some of his emotional fortitude. Then he gets another bad hand, and then he says, what's happening? And then, okay, I have to make this up there. Like, I've had 2, 3 bad hands. I'm going to do double or nothing. He goes on tilt. He takes his game plan that brought him to where he is, takes it, throws it out the window, and then he doesn't play odds anymore. He doesn't do anything properly. He just says, okay, I'm going to bluff here, do that, and he just create crazy decisions. Even professional players, they do that sometimes. They start trying to hit balls outside of the strike box, like those are low probability things. They could connect, right? You could get lucky, but most of the time over many, many trades, that will not work out. And that's all because your emotional capital drained. And when you're down here and you buy the breakout, your emotional capital is full. And if you're stretched up here, or let's say you bought up here at $100, 80, 90, stretched from the moving average, as soon as there's a drawdown that comes down violently, that's going to drain your emotional capital, because you have nothing to hold on to, right? You look at that and say, oh my goodness, look, the buy entry was down here. Where's my support? Yikes. Like, where's this thing? Like, am I going to spend a couple of years? Am I going to have this to hide this from my wife, telling her, look, honey, silver, it'll go up higher eventually, but right now we're for a couple of years, we're stuck, It's like all that stuff plays on you. And eventually what happens is, then after that, you buy at the lows, you sell at the lows, because after a year or 2 years, how many people like sold, whoever, like, a lot of people that bought here and they sold down here because they got drained emotionally, right? And I'm just making a case, maybe you should have never been in that, as soon as it started falling apart here, you should have exited. And because if you hang on too long in the long correction, then you're highly more susceptible of draining that making a wrong decision because you have no more emotional fortitude left. And after that, when silver breaks out, guess what? You don't believe the breakout. How many people were telling me back then, uh, silver, it always this not deceives you, but disappoints you. Okay, they'll never let it go up. Remember that JP Morgan's controlling everything. It's 2011 again. It's 1980 again. But I was telling people, look, I don't care about all that. The chart's breaking out. What do you want me to tell you? It's breaking out. If you had look, it doesn't mean all breakouts work out, Pat. But what it does tell you is you have the odds skewed in your favor. It's like a poker player. He knows with pocket aces and whatever. If you flop some other ace on the he's gonna say, okay, my odds, I might not win, I might lose my 3 aces, but at least I have the better odds, right? This could have faltered here, right? We don't know but guess what? That was your opportunity skewed in your favor. That's the market telling you there. So again, I'm reiterating this. People just remember, next time you see a chart pattern with this type of correction, it doesn't mean it's going to go rocket upwards like silver did, but at least you have a fighting chance. You have a fighting chance here. It took many quarters here for it to take off there, but eventually it just went, it popped like a pimple, a volcano, whatever analogy you want. And look here, even here, look in the 1970s, bam, hits, resistance. Oh, look, breakout, man, Pat. If you see that again, you buy it, and that's when you're bullish, because that's when you have a shot at it. And they repeat over and over. And on the inverse, when they break down there, you got to be careful, because if it happens at the downside, then you could be stuck for many, 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 many years. And it's not a lesson I want to tell people. It's just my observations of why charts work, because it's the same building blocks over. I could put the gold chart. I could put any chart you want there. You want gold? It's the same pattern that repeats over and over. Sideways move. No, look at that. This is one of the most beautiful breakouts you will see in your life. I know that date by heart. June close of 2019. Out of the cloud, out above both coil and tight 12 and 36 months moving average. If I put that on the line chart, look at that. 1, 2, 3, fourth reaction, a practically horizontal line. My goodness, man. I don't want to say bet the house there, but that's when you lever up at the beginning like this, because that's when nobody cares. The price is not stretched. Look at the distance from moving average. Look at that. This is beautiful classical T. Like, look at that. Look at the setup. Not stretched at all, Pat. Look at that. Bam. Explodes. Then you lost momentum. So you had some warning signs that a correction was happening. But then after that, you had another shot at glory right there. Look at that. Bam. Look at that breakout here. So I dare anybody to show me an equivalent lower risk entry point like we had in June of 2019, like we had in December of 2023. Show me, guys. I dare you. It's not here. I'm not saying price can't go up, but if you miss those 2 shots, you've missed them. They're in the rearview mirror. You've missed them. Now you could buy here. Silver, gold could keep going up. I'm not saying it's not going up. Like I said, oh goodness, look at that line. It's in a beautiful uptrend. It's still, until the momentum's lost, it's still trending above the rising support line. Beautiful, beautiful rising support line. So it's not that it can't go up, but the move, you see, the guy who entered here, he's already up 154%, right? The price, that was the entry point, the comfy entry point at 2000. If it goes down 10, 15%, you're not scared. Your emotional capital will not get drained as much as a guy who's entering here at 4,000 or 5,000. And then after that, if there's a small drawdown, another way to see it is lower risk entries they're less likely to get you in a losing position, right? Because it's breaking out, and it's just, as anybody who bought here was in the losing position maybe for a couple of days in the following months, but after that, they were never in the losing position, never, right? The person who bought here, they were in losing position for a short while in that month, a short while there, a short while, but not even close to getting their sell stops triggered, which was anchored like below the previous swing low. And after that, that's all she wrote. It just kept going up. Never to see a losing position again after that. That's what I wish for everybody. Anybody who looks at chart, I just wish them, or anybody who trades, invests, I just wish them that they get an opportunity like that in their life, and they will. They just have to be patient. These things are all over the place. If it's not gold, silver, it's going to be oil plays, it's going to be copper plays. It's going to be somewhere. There's going to be a crazy play out there, but gold is not offering that play anymore. Silver is not offering that play anymore. They're just going to need some time there to create this, to create these opportunities there. I just don't see them there.
You made a great point, especially about the poker player. I mean, play the probabilities. You play the probabilities. Chances are you may do substantially better. Otherwise, you're going to end up on the best of Phil Hellmuth. You're going to end up on one of his tapes
Yeah.
when he's on tilt.
Yeah.
But
Yeah.
you mentioned that $250 silver. I hear some guys calling for $300 silver. Is it still obtainable? I guess it is. You said about 250, but what do we need to see for this to happen? Is it just time or
Just time. Just time. It's gonna silver's an uptrend. Destruction of purchasing power of the U.S. consumer is putting a floor on all this stuff. But the volatility could be there. But silver is heading to 300, 400, 500. I think even I have some targets here. I have an $800 silver somewhere. Where's my latest poster? I think $20,000 gold. Right now it's bouncing. So here's the Dow Jones priced in silver. Here's a one bounce, two bounces, and it's bouncing right now on that line. So it's morphing, that quarterly defined line. It's morphing into existence. So people, if that chart's going down, that means silver is outperforming the Dow Jones. The Dow Jones in real terms or in silver terms is falling apart. And this, it's a replica of what's happened back in the 20s. Blow off top, sideways. That's the Dow Jones price in silver. And I'm using silver because silver was not pegged like gold back then. So it's not just the price of the Dow Jones creating this ratio chart. It's actually silver price going up or going down or not going up as fast as the Dow Jones, carving out that chart. And I think we're like in 1968 there, once again, and with the rates going up, the yields going up. And we're right here, we're bouncing right now. I did this chart a little while back there, December 30th, but right now it was below when silver went crazy, but now like you saw on that other chart, it's had as a wick below, but now it's above. So that could be a period where silver corrects, goes sideways. The stock market could outperform silver a little bit. So reflating this ratio chart in favor of the Dow Jones, but it's at the same time, it's morphing that line into existence, right? Like 1, 2, 3, 4, 5 touches. Then when you break, it's crazy. 1, 2, 3. It's reacting here. Then I don't know how long that transition period is going to go up. But once we close back down below that, that's like crazy outperformance of silver, of gold, to whatever silver is, $100, $80. When that line falters, that's after that unleashes $800 silver. I wrote 10,000, but I think it's going to be more like $20,000 gold, 300, like peak stuff, guys. People say, it's going to be another world, guys. Look, we didn't stay at the peak in 1980. Gold did not stay at that peak very long, right? There was an adjustment after that, and then a correction, and went sideways for a long time. 2011, see, it took many, many years to digest that. So there will be a crazy peak there. Then after that, the price, where it was 20,000. My goodness, look. Then after that, we might go sideways, a huge flag, and then that could be it for gold for a little while. So it doesn't mean we stay at 20,000. It could easily go to 10,000 and hibernate for many years after that. But because we're following charts, we're not going to get stuck when that happens. So that for right now, I don't think there's any type of long-term evidence that silver's permanently topped of gold. All that stuff, it's still still game on there for a long and meaningful rise in fiat price for gold and silver, but also versus the SPX, they should outperform drastically still. SPX, Dow Jones, that's still on the table there for longer term bullishness. But it could be rough there in the next year. I don't know, like we're hitting some resistance right now. But so again, it goes back. Are you a trader, guys? Are you a scalper? Are you a swing trader? You got to understand that first. Because if you're an investor and you're looking at my daily charts, it's going to confuse you. Well, Patrick, how could you say there's something happening? You have long-term targets. Well, I'm telling you, it's not enough. I'm doing a zoom in. It's not always a straight line, right? I'm showing you a zoom in that there's a correction happening, and the longer term uptrend can never go back up until the shorter term trend resolves upward, right? It's a roadblock for now that has to be digested.
Right. Just a couple more questions here. The ratio got down to 45 at one point, gold to silver ratio. Are we going to see that again?
All right. So here it is. So right now it's bouncing at that. Yes, it will. What I think is happening right now is we're just reflating. There was a breakdown here somewhere. I'm not quite sure how I'm going to put that line here, but I think we're just going to, what's happening now is we're going to reflate the gold silver ratio, maybe retest that line. And then after that, the crazy move for silver, I think it might actually go even lower. Then after that, we're going to go like this there somewhere. So what's happening now is just probably just a technical like retest. Silver will probably underperform gold for a little while. Let that reflate here. Go back maybe, I don't know if 75, maybe 67. Right here, there's some resistance. Previous support. Once you break below it, it becomes resistance. So that's my longer term roadmap is probably something like this. So we're probably going to see even lower there, 30, 20, 25 to 1. I think that's where we're heading eventually there, somewhere at these levels there, down here.
All right. Patrick, Karim, I want to thank you for sharing your insights with us and, of course, your analysis. Can you let us know how we can follow you on social media and about North Star Bad Charts?
Yes. Guys, all the crazy stuff's on X, Bad Charts 1, but it's not like nuanced like on our website. So the website, northstarbadcharts.com. Maybe for your viewers, they could use I could give them a discount code there, Sound Money. If they use that discount code, they could get 50% off. But that's when we give, like you could chat with me and Kevin, and you get all the nuance, the actionable trades there. They're all on the website. So yeah, that's pretty much where you could find my stuff, guys.
All right, Patrick, Karim, I want to thank you for your time, and let's do this again in a month or two and see how things unfold. And again, I look forward to seeing you once again. Take care.
All right. Take care, Pat.
That was Patrick Karim from North Star Bad Charts, sharing his insights on the markets and metals. And this may be the year for you to reallocate your metals holdings. If you'd like to know how you can do just that, please do contact us at www.auctusmetals.com.